Scene script. Picture this, it's the start of 2024, and the Nasdaq is down 3.25%. The S&P 500 has fallen over 1.5%, and Apple, one of the largest market cap companies, is down nearly 10% from its peak in mid-December. Now that's quite a way to kick off the new year, isn't it? And it's not just the broader market feeling the pinch. Apple, a titan of the tech industry, has been grappling with its own set of challenges. The stock is down nearly 10% from its mid-December peak. Analysts have been reevaluating their rosy forecasts, with several downgrades hitting the news. But that's not all. The Department of Justice has also been eyeing the tech giant, with potential antitrust action looming on the horizon. The thought of such action has understandably caused ripples of concern among investors. After all, regulatory action can often lead to significant changes in a company's operations, which can impact profitability and, by extension, shareholder returns. But here's the kicker. Apple's challenges aren't just an issue for the company or its shareholders. They have broader market implications. As a company with one of the largest market caps, Apple holds a significant position within the S&P 500 and Nasdaq. And when a company of Apple's size stumbles, it can create a domino effect, shaking the entire market. So, what we're seeing here is not just an Apple problem, it's a market problem. These challenges faced by Apple could potentially affect the broader market index, causing fluctuations that could impact a wide range of investors, from individual stock owners to large institutional investors. As we can see, Apple's current situation is not just an Apple problem, it's a market problem. Despite these challenges, Apple remains a force to be reckoned with in the market. The tech giant's recent performance clearly demonstrates its resilience and ability to navigate turbulent waters. With the stock down nearly 10% from its peak in mid-December, Apple's journey hasn't been without its bumps. Yet even these obstacles haven't managed to dim the company's bright prospects. Analysts are optimistic about Apple's future, predicting a monumental leap to a $4 trillion valuation by the end of 2024. If this comes to fruition, Apple will make history as the first company to ever achieve this. This remarkable prediction is driven by a combination of factors, including the potential production of 240 million iPhone 15 units in 2024 and an expected surge in demand from China. But it isn't just the hardware side of Apple that's expected to drive this growth. The company's services side is another major contributor, with a potential worth of $1.6 trillion. Revenue from services is playing an increasingly important role in Apple's overall performance. This includes everything from the App Store to iCloud to Apple Music and more. These predictions aren't just pulled out of thin air. They're based on the company's consistent performance and enduring appeal. The stock surged 44% in 2023, contributing significantly to the S&P 500's year-to-date gain. With the introduction of innovative products like the Apple Vision headset, the company continues to push the boundaries of what's possible. So, yes, Apple has its challenges, but it's clear that these are far from insurmountable. In fact, they're part of the journey of any company that dares to innovate and disrupt. The road to a $4 trillion valuation won't be smooth, but if any company can navigate it, it's Apple. Even with the challenges, Apple's future looks promising with potential for significant growth. So, with all this information, what does this mean for investors? Well, let's dive into the crux of the matter. The year 2024 is being hailed as a golden opportunity for investors to own a piece of the apple pie. Why, you ask? There are a few compelling reasons. Firstly, despite the recent hiccups, financial experts predict a potential 30% upside for the tech giant. That's right, a 30% upside. This essentially means that Apple's stock price could soar, providing a significant return on investment for those who choose to invest now. But what's driving this optimism? One major factor is Apple's foray into the AR/VR market, with the introduction of the Apple Vision headset. This isn't just another product launch, it marks Apple's entry into a whole new industry segment, one that's ripe with opportunities and promising growth prospects. This new venture could significantly boost Apple's valuation. We're talking about a potential leap from its current valuation of around $2.99 trillion to reach a staggering $4 trillion by the end of 2024. Yes, you heard it right, $4 trillion. That's a trillion with a T. And let's not forget, Apple's revenue from its services side could reach a whopping $1.6 trillion. That's a sizable chunk of change, folks. Moreover, Apple's robust product pipeline, including an estimated 240 million iPhone 15 units in 2024, with strong demand expected from China, further solidifies the case for investing in this tech behemoth. So despite the recent market challenges and the turbulence in Apple's stock price, it's important to see the bigger picture. The potential for growth and the promise of high returns make Apple an attractive prospect for investors. Given the recent market performance and the future projections, Apple still stands as an attractive prospect for investors. So are you ready to seize this golden opportunity? We've covered a lot today, from Apple's market challenges to its future prospects. We've seen how fluctuations in the market can impact even the biggest of players, and how these moments can potentially offer golden opportunities. Staying informed about market trends and understanding the performance of companies like Apple is crucial. It's your key to making well-informed decisions, whether you're an investor, a tech enthusiast, or simply someone who likes to stay on top of the news. So don't forget to hit the subscribe button for more updates on Apple and other market movers. Stay tuned, stay informed.